Hey guys, Brian Asset Management here, and today I'm looking at the 3M company, ticker symbol MMM, using my 7 simple steps. Let's have a look at the stock price since the pandemic. You can see that pre-pandemic it was trading at around $180 a share and then hit lows at $117 during the pandemic, so that would have been a great time to buy, and has rebounded pretty strongly over the last year and is now at $197 a share, which is higher than its pre-pandemic price. So if we just compare it against the market here, I have the S&P 500 in the orange and 3M in the candlesticks, and if we look over the last month, you can see the market has just beat 3M by a few points. But if we compare against the last 3 months, you can see the 3M has completely blown the market out of the water here. Really has been a good purchase over the market in the last 3 months. And if we look at the last 6 months, once again, very, very neck and neck, but the market has just overtook it. So in the last 3 months, 3M has been a much better buy than the market. So let's have a look at my 7 steps. At the time of this recording, MMM has a share price at $198.59 a share with a market cap of $115 billion. So let's have a look at step 1. Is the PE ratio less than the market? And 3M's PE ratio is around about 21.47 and the market with currently 40. That is a pass. Next is the PE ratio less than the sector, and the sector of industrials is 42.48. So with a PE ratio of 21, that is massively under, so 2 passes off the bat. Try to give it the bonus mark here. Is it less than the historical average? Historical average is 17.5, so that is no bonus mark for 3M. Is the revenue increasing? And these values are from 2017 to the present day, and the revenue has gone from 31.6 billion to 32.184 billion. So that is a pass. 3M's revenue has increased. Now we want to see if the profit of 3M is increasing, and the profit has gone from 4.858 billion to 5.384 billion. So once again, that is a check mark there. That is 4 passes off the bat. Just before I go into my 5th step, I just want to say if you've enjoyed the video, please give it a like and give your comments on 3M down below. Do you think it's a good buy? Anyway, let's go on to step 5. Are the shares outstanding decreasing? And the shares have gone from 597 million to 577 million, so that's good. 3M are rewarding their shareholders by buying back their shares. Now let's have a look at step 6. Step 6, are the current assets greater than the current liabilities? And the current assets of 3M are just under 15 billion, whereas the current liabilities are just under 8 billion. So that's a massive pass. They can easily pay it off. And in terms of their total liabilities, they can pay over a third. So no extra check mark yet again, but the core step there is a pass. So that's 6 passes off the bat. Can it be a perfect 7? Let's find out. Is the free cash flow increasing? And the answer is yes, the free cash flow has increased. It's gone from 4.8 billion to 6.6. So that is a pass, and that brings the total passes to 7. So as per the checks, this is a perfect stock to check and to do more due diligence on, because each one of these has passed. No bonus marks, but 7 core steps have passed. So with a free cash flow of 6.61 billion, I have calculated the yield and the ratio, and it has a free cash flow yield of 6.6 billion divided by the market cap, which gives a very good 5.75%, and that is a ratio of, just flipping the numbers, of around 17.39. so these are very good numbers. 3 to 5% is what I'm looking for, and this is over 5%, so that is excellent. Great news for 3M. Let's have a look at the dividend. So 3M currently has an annual dividend of $5.92 a share, which is great, and that is a current yield of 2.99%. The most recent dividend was paid to its shareholders on Friday the 12th of March, and if you want to get paid the dividend next time, you will need to purchase the shares before the 20th of May, and then you'll be paid the dividend on the 12th of June. The company has a massive 59 consecutive years of dividend growth, which means it's a dividend king informally, or a dividend aristocrat, but it's one of the few companies that has 50 years of consecutive growth. You may have seen a previous one on my previous video, which was Procter & Gamble. A lot of guys didn't know about it, but 3M is in great company here. And if we look at the 3-year dividend increase, it is 25%, which is massive, and on average it increases the dividend by about 7.75% a year. So 3M really like rewarding their shareholders. Looking at the payout ratios are safe. I'm looking at the free cash flow, and that is 41% of the free cash flow. So I don't think there's any worries of 3M not paying out their dividend. And if we look at their estimates, it's around 60% of their earnings. So I look at free cash flow, 40% is well within the boundaries. So now I'm going to have a look at some analyst ratings, and surprisingly the analysts have it as a hold, with 3 buying, 5 holding and 2 selling. This is based on 10 Wall Street analysts, and they have an average target price of $193 a share, which is just around a 2% downside. But on the high side, it has it at $205 a share. And Simply Wall Street use a discounted free cash flow model. They actually have it at a fair value at $196 a share, which means it's currently 1% valued. So Simply Wall Street are saying that it's worth what it is right now. Quite surprising. So now if I look at my valuation of 3M, I use a discounted free cash flow model on the left here, and then I use the Buffer Graham intrinsic value. So I've calculated the future cash flows. As you can see, these numbers aren't anything too crazy based on the previous ones. 2020 I've said maybe is a bit of an outlier, and I've tried to increase from 2019 and sort of forecast it out, and I've got a calculated stock price at $254.86 per share, which currently means it's at a 28% discount. So discounted free cash flow is saying it is a buy. And if we look at the Buffer Graham intrinsic value, that would give a fair value of $227 a share, but a Graham price at around 170. So both models are saying it's a buy. The Graham price does describe a stock that if you buy it at that price and hold for 20 years, you will not lose money, but it does have a fair value saying it's currently undervalued. So 14% undervalued according to Buff and Graham, and 28 according to my discounted free cash flow. So the models are looking very bullish on 3M. So I'm going to have a look at some of the technicals here. Firstly, going to look at a moving average, and I have a 50-day in blue, the 200-day in gold, and 3M with the candlesticks. So if we look at some of the last bullish signals, you can see that there was a golden cross at the back end of August, which would have been a massive buy signal, and then prior to that the price actually crossed both moving averages in early August. So August was definitely showing massive buy signals. As you can see here, the price has fluctuated around the 50-day moving average, and the 200-day did provide some support, and it hasn't broached that since August. You can see it tried to here in October and did again in late October, and once again did in January. But once that provided some resistance, it broke through the 50-day again. But if we look at the more recent times in February, you can see that maybe the 50-day is providing a little bit of resistance here, so it's not going to break the 50-day. So it has diverged quite a bit from that, but very bullish signals looking over the last couple of months. So I've just added a parallel channel here on the last year, and you can see the price has been contained pretty easily in here. It's never really crossed below, in fact it hasn't crossed below the bottom line in the entire year, and even then it hasn't crossed above the top line. So according to this, it does have more room for growth to even get maybe to around $208 a share in the coming weeks. So if it hits there, it might be worth you taking your profits and selling, and then buying back on the rebound. So if it went down to below the line, you know, anywhere from 190 downwards, it would be a definite buy. And I mean, if it crossed below $176 a share, that would also be a massive buy as well, as it hasn't broke that since the pandemic. But I don't think it'll be going that low anytime soon. But definitely saying that it still has room for growth, and maybe take your profits in the short term and look for another buying opportunity later. So very good signals looking at the technicals. Right guys, I want to thank you all for watching my stock analysis of the 3M company, ticker symbol MMM. Please give a like if you enjoyed the video, and leave a comment on your thoughts on 3M and if you do think it is a buy still. And I want to thank you all for watching, and catch you guys next time.